Live.
Awesome. Good morning, good afternoon, good evening, everyone. I believe we have international viewers here. This is Stock Unlock Live. We're co-founders of Stock Unlock, me and Daniel. You probably recognize Daniel from his huge YouTube channel up in Canada. We are huge stock nerds. We're data nerds. We're engineering nerds. And we go live to talk about what's going on in the market. Daniel, speaking of the market, I saw that you've been putting out a lot of videos on Melly and recent earnings. I also know that you are thinking about moving around some stocks. So without putting words into your mouth, because I know that everything's public, would love to hear what you're doing with your portfolio and if there's any exciting updates to share there.
Yeah, I think on my channel, I did let everyone know that I bought some more Melly after earnings. I thought that drop after earnings was a little bit silly, in my opinion, so I bought some more. I actually did buy a couple of shares pre-earnings, and then it fell. I bought shares, and then about 15 minutes later, I saw the stock was down 17% after it reported, and I was like, nice. And then the next day, I had to buy some more. So yeah, I bought some more Melly. I think it's a great company, and I think that's pretty much the only update from me. So yeah,
I bought a share of Melly. I bought a share of Melly as well. I have actually made a handful of moves in my portfolio. I'm still sitting pretty at maybe 20-ish% cash.
Oh, damn.
I feel like the market's very frothy, but I've had some skeletons in my closet. A lot of people will remember, and to keep us all honest here, we've been on a big investing journey. A lot of the reasons why I think people follow you, Daniel, is they've seen you grow as an investor, and we've all been doing that as well. Obviously, you are more of the public-facing figure, but there's hundreds, if not thousands of us, people like me and a lot of people in the comments that are on that journey as well. A company called Trulieve, which you at one point were very bullish on your channel, and me individually, I was bullish on them as well. This was a marijuana company headed by Kim Rivers, and they were doing pretty well in Florida. So if you just looked at the financial statements back in 2020, 2021, objectively speaking, they were growing, and there was a bull case to be made with a lot of assumptions and risks, obviously, that they were going to continue growing and be a good stock investment. What actually ended up happening was Kim Rivers ended up making promises that she didn't deliver on. The company acquired another company called Harvest, which had a lot of promises around it that never panned out. Also for the macro, a lot of the regulations have not been going the way of marijuana legalization anyways. I took a huge loss. I have been bag holding the stock since 2020, 2021. I haven't touched it. It kind of just became something I didn't think about. And I eventually got to the point where I was okay booking what was, I think, a 75% loss around $6,000, which sucks. But I started really thinking deep, and I'm like, why am I holding this if it's just a lottery ticket? Do I believe in this stock, or is this dead money? And I actually sold it after the Trump election and seeing what was happening with voters in Florida. I'll actually end this little rant by saying, too, that in New York, marijuana is recreational now. And I do use marijuana, to be clear. I'm fine saying that. It's something I enjoy. Some people try to enjoy beers on the weekend. And whenever I go into these stores, it's a ton of brands. They don't have pricing power. They're not really letting big industry in because they're trying to do that retribution clawback to people who are persecuted from crimes in this space. So I just started looking at all that and kind of bit my lip and was like, okay, I lost. This isn't working. It's a losing strategy to hold on to dead money. I know you came to this conclusion maybe $10 of share price ago, a year or two ago, but I'm finally in that camp as well. So yeah, Trulieve is completely sold for me at a pretty big loss, and I'll be tax loss harvesting that for a few years for sure.
Yeah, this brings up some pain, man. It definitely is not my best or shining moment as a YouTuber, but you live and you learn, right? So
what's that chart you're looking at there?
Yeah, so I'll get into that in a second. I want to finish my thought. So this is Trulieve here, right? We can see when I was bullish on this company, its revenue in 2017 was 16.6 million. And then in 2020, when I found it, the revenue grew all the way to $522 million. So I don't know, that's somewhere around 25 to 30x revenue in 3 years. And it was just such a beast. Look at this. Look at this growth. 1.23 billion in revenue. Then it started to come down, and it's just been flatlining. And yeah, I think I've explained my story on Trulieve, but it was just a sad investment, man. It didn't work out. And now I believe the stock is down a lot recently because Florida had another vote for recreational cannabis legalization, and the Florida voters voted to not legalize recreationally. So it's fallen 51% in just a few days. And I just don't even, I don't care about this stock anymore. I don't follow it. But yeah, it's fun to look at it every once in a while and just see what's going on with it.
It's not fun to look at it every once.
Yeah, yeah, whatever. They're also like, I don't know how to, I don't want to get into this too much, but just to finish off my thought, if you look at Trulieve right now, you'll see a price to free cash flow of 3.66 and a free cash flow yield of 27%. So you may be thinking, oh, this stock looks really cheap. But why their cash flow is high is because they're not paying their tax. They're just refusing to pay tax right now. And I don't think that's going to work for them. Like, the government's going to come after you. So yeah, that's the situation over at Trulieve. But now to talk about some fun stuff. This is a new financials tab that's in the works. People of Stock Unlock will not see this right now. It's kind of buggy. Like, Jake, I notice right now that when I click quarterly, the bars don't update. So this is not a finished product, everyone. Okay, we're working on it.
Yeah, just let me interject for 2 seconds. I have been pulling like all-nighters and coded a lot of this with a lot of new AI coding tools, and maybe like 9 hours or like something crazy. It leverages a lot of the code we wrote. Anyways, just saying that so people understand this isn't even released to beta testers yet.
Yeah.
So it's buggy. But yeah, sorry, back to you.
Yeah, that's just a fun story. So what about Airbnb? Because I know you're a Super Bowl on Airbnb,
Yeah.
and we all know.
I've been buying more Airbnb. You poked the bear. Yeah, my last thoughts on Trulieve, just for like us to have takeaways from this conversation, is 2 things I learned, which I knew but really got beaten to my head, and it was a $6,000 lesson. Really trust management. Kim Rivers ended up being an overpromising, under-delivering piece of shit. Part of my French, and also understand moats more. I didn't understand moats very well back in 2020, 2021, and I think Trulieve does not have a moat. So kind of obvious when you look at it in hindsight. But yeah, Airbnb, they reported, I believe, last week. It was really funny, actually. Like, right after the report, the stock ran up into earnings. At one point, it was like $167 within the first few minutes and after hours. And I took a screenshot of that, went to Twitter. I was like, wow. And then I went to the earnings report and I read it. And I'm like, I don't know why the stock's up so much. It was just a, regular quarter for them. And then the stock came back down. Yeah, I don't want to rant too much because I talk about Airbnb all the time here. I thought it was a solid quarter. There was nothing extremely exciting about it or anything that changed a lot. The general sentiment that I am gleaning from their business right now is they are perfecting their core, doing international expansions, and heavily in development on some very tight-lipped new products. I'm going to bring up a tweet that I put out actually on this because Brian Chesky said something absolutely ridiculous. But it's going to take me a minute or two to find it, Daniel. I'm not sure if you looked at Airbnb earnings. You have any thoughts there?
I honestly have not. I didn't even look. I just took a quick look on Stock Unlock, and I noticed that it seems like revenue is still growing. It looks like their cash flows haven't grown in like 6 quarters, though. Well, not meaningfully, maybe by 5% or so.
So I'm trying to find the quote from Brian Chesky on earnings, but I'm not finding it. Yeah. So I know this is boring to listen to me scroll. All right. I don't know where it is, but yeah, I mean, I'm pretty sure their cash flows are growing. Their free cash flow margin went down a bit, deferring tax revenues and things like that. But yeah, their core Airbnb business is growing. They're looking for international expansion. The things that have me very interested about Airbnb and why I'm so bullish on it is I'm looking at the future of what they're doing. A lot of it comes down to the CEO, Brian Chesky. They are not just going to stay in travel. So if you look at Amazon, they started off like selling books. If you look at Google, they started as a search bar. And I can't do justice to the way Brian words it. But again, Brian Chesky is the original founder of this business. He actually went through Y Combinator with us. And he's been there since the beginning when Airbnb was just like people renting rooms and there was like 100 people on the app. So his mindset on growing the business and what he said is starting in 2025, they're going to be launching 1 to 2 new products a year that within 5 years of launch should be at a 1 billion run rate per product launch. That's also going to be operated at similar margins to their core business. Now, there's two sides of this. One side of it is, wow, like he's promising a lot. Like, how do we trust this guy? Maybe he's pumping the stock. The other side of it is like take a deeper look, like understand who this person is, what they've accomplished, and like what their track record is. I am like very, very bullish and have a lot of belief in Brian Chesky that he will capitalize on a lot of these things. I've heard him talk a lot at length in earnings calls about how they think about AI and bringing these new products in. But that is the big bet here. And I feel safe about it because Airbnb is extremely profitable. They're buying back shares. It's a global brand. That brand itself is continuing to grow and scale. So at the very worst, I would expect market returns if they don't actually end up crushing it on expanding outside of travel. But Brian Chesky to me is one of the most iconic, best founders of our generation. I really like to bet on management teams and companies that I believe have big moats. And I do believe Airbnb has a huge network moat. And I'll stop there. Like that's a lot of my bull thesis. I get it is hand wavy. And the biggest hole to point at it is the risk associated with the anticipation of them expanding beyond their core. And I recognize that. I just know that where the stock is priced today and on their core business, if they don't end up hitting all those goals at the timeline they expect, it is still a well-performing, profitable asset with a moat that will protect its profits. Just my opinion there. So yeah, that's my monthly Airbnb rant.
Right on. Yeah, I haven't taken a look at the earnings. I don't know too much. I do see that it is trading for a 20 price to free cash flow today, which, you know, relative to the market is really not that high right now.
You would definitely take out SBC. So it's probably more meaningful to look at the yield taking out SBC because they do more SBC than what you'd probably feel comfortable with.
Yeah, they do.
I know we have different thoughts there.
Yep, we do.
Yep. And other things people have pointed out, which is true, is like, hey, like look at their revenue growth, like how much of that is like interest income. So just like one quick comment on that, like, like every other company, they do good finances and they make sure that they're getting yield on the cash that they have sitting. However, their revenues are expanding and growing like faster than the portion that's coming into it from the interest income. So it just wasn't a concern to me.
Yeah. Oh, I see the S&P is down 1.4% today now. Right on.
Dude, let's talk about Crocs.
Amazon down 5% today. Holy smokes. Okay. Yeah, we could talk about Crocs.
Well, there's Crocs and then there's also Hims. You've actually looked into Hims more. So maybe the chat can chime in here too. Andrew.
Hims on a financials basis is so ridiculous. Like they've upped their guidance in the most recent quarter. They're projecting 90 something percent revenue growth this year now, and revenue is accelerating. Highly profitable. On a go forward basis, they're probably doing somewhere around $500 million in free cash flow now. On like here, I'm gonna stop talking off my brain because I've noticed that when I do this, I get numbers quite wrong. So I'm actually gonna go look at our data.
You're like an AI hallucinating.
Oh, dude, my brain AI hallucinates big time. Okay, so on the cash flow statement, if we take a look at the quarterly number, they did $85 million in cash flow last quarter, and their cash flow is consistently growing. So on an annualized basis, 85 times 4, 340 million in cash flow now. So 340 million in cash flow, more cash than debt, or more cash than total liabilities, $4.56 billion market cap divided by 340 in annualized cash flow. So they're trading for 13 times cash flow right now on an annualized cash flow basis. And they're growing revenue at 90%. Like that is ridiculous. Like based on the financials, this stock looks ridiculously cheap. So my question is always, and I think the question of the market is just what is this thing's moat? Because when you look at the actual business, like theoretically, it should be very easy to replicate. And Amazon is now trying to replicate this business. And that's why the stock has dropped, because Amazon announced that they are starting to actually try and compete with Hims. So it's down 35% in a few days. So yeah, that's the thing that I just can't get over is I think if Amazon wants to, they probably could replicate this business quite easily. But right now, 13 times cash flow for 90% growth is insane. Like it looks ridiculously cheap. So that's where I'm at with this one.
So, okay, I've looked into this too. I heard another theory on the price change. I think it's multiple things. Apparently, no.
Keep going.
Maybe yes. Sorry, that threw off my focus. Okay, we're talking about hymns. You brought up that Amazon coming in like was the reason why the stock dropped down a lot. I actually agree. Like that event is pretty timely. In terms of looking at the stock farther back, someone else also came in, and this isn't really what I invest around, but it does move markets a bit. Apparently, the CEO, and I don't even know what direction it was in, to be honest. I did not look this up at all. Apparently, the CEO of this company started making very opinionated statements on the Israel Palestine conflict going on. I actually don't even know which side of it he was on. I just know that he said statements there. And that's usually like a lose-lose because you're going to like piss off one half of whatever people are using your product. So that seems like something too that's moving it around. And the only answer I got for the moat, talking to people on Twitter, because Hims is a huge FinTwit stock, like almost up there with Palantir. Like people are all over Hims, like Rocket Lab. It seems that for Amazon, you need to actually like book a call to get a consultation on Hims. You could just do it all online. And then there is a privacy aspect with like some of, I might be wrong here. I think that they sell like erectile dysfunction stuff and like hair thinning, like things where like, Daniel, like you and I are obviously like both balding over here. So like it's embarrassing for us, right? That's a lie. I'm making a joke. But like you don't want to talk about it to everyone, right? So like when you build trust with a brand like Hims, there could be a moat in the brand around, hey, like this company protects your privacy. Now, my opinion on this, I think this is a stretch for a moat, but I see the argument and it was compelling enough that I thought it was worth mentioning. And we'll obviously just have to see how this plays out. Like also cost plus drugs from Mark Cuban, right? Like Microsoft is also getting into healthcare. But what I start thinking here, even though it's a different chat, and I do want to bring us back to Crocs, is like, I actually don't know how I feel about all these big tech companies starting to go into like every industry. There was like a book on this, like when businesses get super big, they all like start competing with each other on similar things because there's like monetary boundaries that you need to have billions of dollars to even participate in. So we see that with AI. The only like newer AI models, with like the exception of ChatGPT, OpenAI, and Anthropic, and they all got billions of dollars of investment, is they're coming from big tech. Most of the big tech companies all have a cloud now, not all of them. A lot of big techs like have a social. A lot of them are getting into the streaming video space now, the streaming music space. And now you're seeing companies go into healthcare. It's because they have a fiduciary duty to their shareholders. They have to grow. They're in business meetings. So like, how do we continue to make more and more revenue? So it's like the incentives are in place for these big companies to do this. My question is it getting to a point where it's like anti-competitive, where like you have a really great business like Hims, and then you just have some bully giant that has like endless billions of dollars at their disposal that's able to spend more than them because they have literally almost infinite money. It's not truly infinite, but you know what I mean? So yeah, like I've been thinking about that more when I see this stuff. Like it's totally getting to the point where I'm like, this is anti-competitive to me. And like, I feel like we're getting closer to a big tech breakup. Most people don't know this. JD Vance, the new VP, he's actually very anti-tech, and he actually sides with I think it's Lisa or Linda Khan. I'm messing up the name. She's the person who's in charge of like regulating big tech now, and we might see some breakups coming. Now, is that good or bad for shareholders? Obviously, these conversations are infinitely dense, but that's more of the tangent I'm seeing from this like Hims Amazon thing. Like I'm an Amazon shareholder, and I almost felt bad seeing this. I'm just like, just being Amazon. Like, why are you getting into healthcare? I mean, it makes sense incentive wise, but it just doesn't feel good at like a logic how capitalism needs some regulation in it sometimes.
Yeah, that was a lot of different topics, but
rant over.
Yeah, going back to Hims, for me, moats are incredibly important in my investing now. Like probably one of the most important things, because it's really what protects the future of your investment, right? If you don't have a moat, the future of your investment then is completely uncertain. So I just don't know I don't feel certain in Hims, and if I don't feel certain, I shouldn't own it. So that's what it comes down to. But again, yeah, based on the price and growth, it purely from a valuation standpoint, it looks very cheap. If it can continue to grow, but that's the question. Can it? We'll see.
Yeah. Well, let us know what you think in the comments. If you're listening to the recording, we do these live on YouTube. There's a video component to this, and we love hanging out with you all in the live chat. This is unfortunately going to be a shorter stream. I have some very secret, exciting life things happening that I need to go plan. Daniel, I also know you're going to Mexico tomorrow, so maybe if we have time at the end, we can talk a little bit about how many pina coladas you're going to drink. There is another there is another stock conversation I want to have, though. So our Discord, which is over 4,000 members now, it's awesome, has been going nuts about Crocs. Crocs is a shoe company. If you've been living under a rock, just Google them, CROCS. Daniel, I could lead this, but might be fun for you to do it. I think it would be really interesting to look at the current valuation of Crocs, maybe understanding some of the downward pressures on this, which has to do with the Hey Dude acquisition that did not go well. So management kind of like messed up there, but it's a tale of two stories with Crocs. The valuation looks very, very, very tasty. Let me just be clear. I'm like super close to, like, after this video, like actually buying Crocs for a swing trade, which I hardly ever do. It's just almost at a valuation that I feel I can't ignore. So yeah, looking at this, their KPIs, and maybe even going into the free form at the end to compare their yields towards like other shoe companies, I think could be a pretty interesting chat. And I know there's a lot of people, speaking of chat, in the chat that are bringing up Crocs as well as our Discord. So it seems to be a hot topic.
Yeah, I mean, its price to free cash flow is 6, which is a 16% free cash flow yield. Revenue is topping out. Doesn't really seem like it's growing right now. Free cash flow is at an all-time high. It's not like growing super right now. So, but yeah, let's look at price to free cash flow.
Yeah, I'd say breaking down the growth, this is where it gets interesting. So if we were in the KPIs tab on Stock Unlock, you would see that the Crocs revenue is going up, but their Hey Dude revenue from that acquisition is going down. So the mix of that revenue is giving like a mixed story to investors, and the stock has been getting beaten up. So the question is, obviously, is the current price too bearish? Is it beaten down too much, or does it actually deserve this? I don't like that management bought Hey Dude and it didn't go well. I have not looked into the comments on that to see how reflective or open they've been to shareholders about a bad acquisition. That's never good to see. And I see more and more people wearing Crocs every day in New York.
Yeah, their Hey Dude brand is not doing well. Like, its quarterly revenue was 280 million in 2022. It's down, looks like roughly 30% now to 204. So yeah, this brand is not doing well. Its operating income is also down like 70% from its high to 26 million. But also that's $200 million in revenue. And how much does Crocs actually produce in quarterly revenue? Like, how big is this actually in the business? It's about 20% of the business.
Yeah.
Yeah. I don't know. I mean, when you have a 16% free cash flow yield, like at that point, the business doesn't even really need to grow anymore, right? Well, like at that price, if they can just maintain current cash flow and buy back shares, then that's a really good return for shareholders. Yes. So the question is really like, can they maintain their business?
Well, also, one thing I want to understand, and if you're down to do this, I'd say let's do it. Let's pop open the freeform tool and look at free cash flow minus SBC yields or price ratio. And I could just throw you a few tickers here. So I think one ticker to throw in will be Nike, NKE.
Nike.
Yeah. Another one is DECK, DECK. That's Decker's shoes. And we should also throw in Onon. Onon, ONON is the ticker.
Oh yeah, I've heard about this one.
Cool. And I've got one more for you, which would be Adidas. It looks like it's actually listed on Denmark, though. So that would be, you can just type Adidas, ADIDAS. And if you're listening right now, Daniel's typing in all these stocks into a charting tool where we're able to visualize all the yields for these companies. And this should give us an idea of how does the market currently price shoe companies in terms of valuation. We know that they're not going to be priced like tech companies, which typically get higher valuation multiples. And this is going to help us as investors kind of like gut check, is Crocs actually cheap? Or like do shoe companies always trade for a 6 price free cash flow? Because if you looked at coal mining companies, they trade for very low ratios.
Okay, so Crocs's free cash flow yield is 16%. The next one is Nike at 6.
Wow.
So yeah, it's up there. Now, I know people don't understand price or free cash flow yields as much. It's just the inverse of the price to free cash flow. So I'll actually just remove free cash flow yield for a second. So Crocs is at a 6 price to free cash flow. And then the next one is Nike again at about 16 times cash flows. So Crocs is definitely selling for a massive discount to these other shoe brands.
So then why did Bill Ackman buy so much Nike? I also know he bought BN. I don't know if we have time to talk about that one, but congratulations, Daniel. Like, Bill Ackman didn't buy Crocs. He bought Nike. The thing that's making me hesitant here, and people might be holding us accountable, like, hey, don't you guys hate brands? Like, we don't hate them. Like, it's just hard to price. So, like, that's my apprehension here. It's like, yes, it looks cheap, but that is my blind spot. Just feeling a little apprehensive on brands.
Bill Ackman, his main investment style is he likes to buy dominant brands when he believes they're going through a period of short-term headwinds, and he likes to buy into them and then actually work with management to essentially turn around the business. That's what he did with CP Rail and Chipotle. That's just his track record. He's an activist investor. So he's probably looking at Nike right now, and for some reason he believes the brand is struggling today, but it's fixable. Like, that's what he does. He invests in companies where they're down, but he believes they're fixable. So he must think Nike's fixable right now. But he also invests in high quality businesses like BN. He just made BN. Technically, it's his second largest position if you add up his 2 Google tickers. So BN is his second largest, but BN is not down. BN's actually at all-time highs. So he also invests in quality companies that he believes will continue to grow over the long term and are cheap. So yeah, that's kind of based on what I've listened to from him and his historical track record. Those are like the 2 main investment styles he has.
Yeah, no, it makes a lot of sense. It's like a good bat of confidence to you too on BN. So congrats there. You are now also a super investor, dubbed by me. You've made it. Router here asks, why is Crocs down so much? Depends who you ask, but a lot of people seem to agree that's because their Hey Dudes acquisition, which makes up around 20% of their revenue, is not going well at all. It's not going according to their plans, and revenue is declining. So that's causing people to have questions about management and how they could like manage shareholder returns and capital, which was obviously very bad so far in the Hey Dudes investment. Daniel, one thing about activist investors, I didn't know this. I was listening to a book the other day. It was actually about like AI-driven leadership. But speaking of leadership, they brought up, I think his name is Charles Icahn, the activist investor. Now, I haven't looked into the stories of when these went wrong. So this one's, I think, pretty obvious, but I forgot about it. Blockbuster and Netflix. Famous story. Netflix goes to Blockbuster. They want to be bought for $50 million. Blockbuster basically laughed them out of the room. But what else happened at Blockbuster, and I didn't know this, Blockbuster actually had started making changes. They got rid of late fees, which was a big source of revenue for them. And they also started a $200 million project to like build streaming, like basically building digital movies. Charles Icahn came in. This is just me trusting the book, by the way. So if someone thinks I'm wrong, call me out. But Charles Icahn came in, bought up a ton of shares, pushed out the person who maybe they were a founder, maybe they weren't, who was like driving a lot of those changes. And he's like, no, like, don't chase fads. Like, everyone's always going to like buy movies, and like we make money off a late fee. So he came in, he reinstated the late fees, he cut the spending on the project, and maybe for short term, for a year or so, it like boosted returns. But as we all know, Blockbuster eventually fell to Netflix. And it was because an activist investor came in and like bought up. So a tangent on like activist investors, but that was a good eye opener for me. Because people really talk about it when it works, but it doesn't always work.
Yeah, when I listened to the Lex Friedman podcast with Bill Ackman, Lex asked him, about activist investors because they do kind of have a good or bad reputation. And the thing about being an activist investor is if you go into a situation like that and you completely screw up the company, your reputation's done. So it's like, it's hard to be a long-term successful activist investor because your track record is incredibly important. And Bill Ackman is one of them, where his track record is like almost flawless. He does have some big losses because he believes in a concentrated portfolio. Like I think has less than 10 positions at all times. So if he makes a mistake, it's a big hit. But for the most part, he's been right, and he's massively outperformed the S&P. Like, he is considered a legendary investor at this point. So yeah, it's just, I don't know where I was going with that, but he's done a good job.
Yeah, I think maybe your point was it's like there's a lot of different activist investors, so it's like they shouldn't be viewed as one group, right? Like Bill Ackman is definitely a special investor, and I totally agree. I mean, Charles Icahn too, right? But it's good to look at their track record. So I hate to do this. I'm having so much fun. The last 30 minutes went by literally in 10 minutes. For most of you here, you know that Daniel and I go live about once a month. I've got to run to take care of things in my personal life, which is very fun. Daniel, not sure if you're going to run off with me or if you want to hang for a few minutes.
I got to go.
I'm seeing some nods. All right. Everyone wish Daniel a very happy trip. He's going down to Cancun, Mexico, and he is going to be getting some well-deserved relaxing. I don't think the cats are coming, unfortunately. They're not. And we're gonna have another couple staying in our house. One of my girlfriend's friends, and her friend is like 7 months pregnant. So we're like giving them our bed and everything, and I'm gonna be sleeping on the couch for the next few days, which is great. I'm really looking forward to it, and I'm loving life, and life loves me.
Right on. I'm happy for you.
All right. Well, thanks everyone for joining. Daniel, I got my finger on the trigger for end stream. Again, we do this once a month. Hit the comments and stuff to get into our Discord and everything. Please like the stream if you enjoyed it. And yeah, we really appreciate it. Have a great weekend, everyone.
All right. Bye, everyone.